Well, good evening, everybody out there listening to us from all the parts of the world. I am Vaibhav Ali, and this is Aura at 8. I waiting for my panelists to join in. Could you please turn on your cameras so that I can bring you up on the stage, please? I'm waiting for Ibrahim, better known as Bob, and Vikas to please turn on your cameras so I can bring you up. And for everybody else watching there, remember this is Aura 8. We go live every single weekday, and this is our 20th episode. So we have Vikas coming. I'm waiting for Bob to turn on his camera. Vikas, how are you doing today, and how is everything?
Doing good. And in terms of everything, like life has been busy, working with multiple projects. It has been a little slow in the last few months, but I think now the market is catching up. A lot of opportunity, specifically in the field of AI and RWA projects, and there are some good upcoming DeFi projects as well. So interesting time ahead.
Absolutely, very interesting time ahead. Let's, with Gaurav and with TDeFi, the kind of stuff that you guys are doing, you have incubated over 60 projects since
It's more
2015. Am
than
I
70.
okay?
Uh,
About
it's
70
more than 70.
projects that you've
Yeah.
been managing. Your AUM is about now
It would be more than, I think, 400 million and over.
400 million.
Yeah.
So, what do you think is a core principle of token distribution that is consistently worked across different market cycles?
I mean, if I have to break it down in market cycles, so there is an ideology in marketing, right, or in sales. Like the customer is always right. You have to treat your customers as God themselves, right? So incentivizing the right set of customers, always kind of vouching for them, has been one indicator. Like the projects who have done it correctly over time, these are the
Could
projects
you
who have done.
could you also lead that with examples like what kind of projects and what kind of token distribution mechanics that you'll use?
Yeah, so basically, just to give an example of treating your customer as God, or identifying the right set of customer, Hyperliquid is the best example in the recent times, right? The token
Have you
distribution
guys
model.
incubated Hyperliquid?
No, 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 no. I'm just giving a general
No, no. Tell
example.
me. I don't know. I would love to know because see, you guys come with massive
Mhm.
experience of 12 plus years,
Yeah.
incubated over 70 projects, 400 million in AUM. I would love to know examples from your side.
Okay, yeah, no worries. So a few of the projects that I'll be mentioning are pending their launch, but one of them is DeFi. So it's a invoice financing based business based out of Dubai itself. And the core problem is they were struggling to identify the right set of users and how to incentivize them, right? So the way that we worked with them was basically first we mapped out the risk parameters. That is an essential part in the token design framework that we follow, right? And then we have to list out all the stakeholders. So these were the liquidity providers, the people who will be borrowing the money, right? And then there will be these managers who will be managing different pools, and then there will be these referral guys as well, right? Who will be introducing the platform or the borrowers to the platform. So basically, these will be the kind of people who would be helping the borrowers or the lenders in discovering each other, right? So these were the main stakeholders. And the way it works is we have to use game theory, right? So you can either use carrot and stick, you can use other game theory models. But what works in this is when you are identifying the design mechanics or the incentives for an LP, right? The core thing that you have to focus on is why would an LP come on your platform and provide you the liquidity. Everyone is offering them an APY of, let's say, 10%, 12%, right? but what is the additional advantage that you can give to them? So for Differ's case, the best part about it was that first thing is your the whatever amount they are putting in the pool, right? It's getting insured. The second thing is, since invoice-based financing have lower default rates, right? And we had also developed a KYI process, which kind of helps us in evaluating a business and the invoice, the credibility of the business. So we were only introducing the vetted invoices to the LPs against which the businesses were borrowing the funds. So the LPs are getting a consistent 12 to 14% return in stables. And apart from that, the token comes into play as an additional incentive layer. So the token was given to these LPs, as an LP token, and other than that, it also had the governance properties. So when you are distributing a LP token to the liquidity providers, the best part about it is they have committed a certain liquidity to your protocol, right? But at the same time, a percentage of that liquidity they can use outside your platform as well. You can go to Pendle, you can go to Morpho and other platforms. You can use those LP tokens and earn additional yield on them. And at the same time, when you return them, right, you still have that governance power. So a time where we reach to maybe 100K users or 200K users on the platform, you are one of the major shareholders or the participants in the governance process, who will be deciding, okay, what should be the borrowing rate, should we levy any fee on that, or should there be a gap period, let's say 3 or 6 months period where we are not levying any fee. Do we need to increase the fee? Do we need to uh, add additional risk parameters? So these are the kind of incentives that a LP would like to have. uh, okay, I think
Got
time
it.
has all.
Yeah, let me just say, Bob, can you hear me? You're on mute if you're trying to speak. Bob, Bob. Okay, we'll try and see if Bob can hear us. But if you're trying to speak, Bob, you're on mute. Because whatever you've told me,
Mhm.
we are kind of looking for more clear and direct answers. The reason being, whenever we go to an event, right? I'm sure you
Yeah.
have been to multiple events yourself.
Mhm.
We tend to get lost in jargons, and we tend to, get lost in terms of whatever is happening in this space. But can you be a little specific on the cycle that you have seen it working
Mhm.
with the token distributions in the past? About 70 plus projects, which, okay, out of the 70 plus projects, who are your top five projects who have done exceptionally well under the incubation?
So the top five would be, I think, Vulcan Forge is one of them, like the biggest example, one of the unicorns. Then there was Drive, Persistence, uh, and one more project. It's Bridge 11. So a few projects like these, right? And the core principle about like what worked with them as well. So for Vulcan Forge as well, the best part about them was they had a community of loyal users, right? So community size was maybe 6 to 8K in total, but what they had was they had
So how
total
was the
faith.
token distribution for them that you guys did?
Yeah, so basically that's what I was coming to. So basically
Sorry.
for them, we identified that these 6 to 8 thousand users who are actually loyal, these are the ones who will be taking the token to 100 million to 200 to a billion, right? So we focused on the community incentive part. Like that was the maximum part. Vulcan Forge was, it started as a game. So at the end of the day, when you have a gaming community, you have to kind of reward the players for the activities that they are performing, for the kill points, for any status they are achieving. So the community reward pool had to be one of the biggest pools that we focused on. And it wasn't something that was given out freely, right? So at the end of the day, you had to work for it. So if you're a player, you had to spend some time in the game, you have to achieve certain titles, you had to accrue those experience points, only then you are getting those tokens. So this kind of engages the player side as well as the protocol side, right? Because as a gaming platform or a protocol, what I want is more and more players spending more time on my game, buying more assets, right? Gaming assets and all, inviting their friends over as well. So all this user behavior, we had to kind of put in the token design. And then what we did was we allocated the maximum part to community. And then as you kind of keep,
Maximum,
progressing.
like, could you give us some numbers? Like, when you say maximum part to the community, so what was the token supply? Like, do you remember?
It was 1 billion. So approximately we gave 33% to the community. And
Wow.
yeah. And the second part about that was, apart from normal gaming users, right? The second part was these I'll say Twitter friendly users, or I'll say more fanatics about the assets, right? These are not playing the game as much, but they like the whole narrative, the art style, and whatever you are doing in the crypto space. So these were the second target customers or the users that we identified. So the community pool was mostly target on them, right? And apart from that, what you need to make provision for is the liquidity pool. So that is something that comes secondary, the liquidity pool and the treasury. A lot of projects kind of define them differently, right? And some kind of make the provision in the treasury allocation itself. So the liquidity
Okay.
pool is something that most projects, they require that initial liquidity when they are launching their token. And the more liquidity that you have at the time of the launch, the more selling pressure you will be able to absorb. And if your token is able to absorb more and more selling pressure, right? So the community will also feel that this token is going to do very well or perform well at the end of the day, because they have the buyer for the tokens that they are selling, right? So they know someone is at the buying end, and this kind of puts them mentally in a position where they know that if I have a buyer at this point, I'll also find a buyer at 10x from here, right? And the game and the protocol is only going to grow from here. So
Is the project still active?
yeah, it is active, and it has actually grown to multiple levels. It is planning to launch its own exchange. It launched a layer 2 chain as well. So it's one of the biggest projects. And yeah, like Jamie is the
Lovely.
founder, so he's been doing really well.
Nice. And what about you know we have what Jamie from Falcon Forge proved to be a strong leader. There's a comment, so just taking the comment. Okay. Uh, there was a hack in the community too.
Yeah.
Interesting to know this. So I just want to break down on the token distribution. So 33% was for community. What about the rest, if
Yeah.
you
So
remember?
for Yeah, I might be a little off, but I do have the estimates. So 8% was for liquidity, that is liquidity provisioning.
Okay.
Uh, 15% was for treasury. So treasury, or you can call it foundation, and or you can call it reserves as well. So in tokenomics, a lot of protocols like to define it in different nomenclatures, but the purpose of this reserve is basically the same, right? You use it for building your funds, for ensuring that you are operational for a longer term of time, right? And when you go for additional, let's say a Series A, Series B round of fundraise, right? So you have these tokens that can be used in case of an event where you need to liquidate some tokens and get that liquidity to maybe fund the operations, or go for additional fundraise, those kind of things.
Brilliant. So we'll dig on that deeper, but then I think the way you're explaining is, I hope all our users are getting it, because because here is really breaking down what goes behind the tokenomics of a project. Uh, Believe it or not, under any project, the tech, when a project fails, it's not because of the tech, it's not because of the people, but it's mostly because of the tokenomics. And I'm glad that we're having this conversation for every young builder, for every new retail investor, since we're live on Binance and we're live on Gate Live. I think we all need to understand and break this down so that people understand, right? So, uh, for the retail investors, how would you explain what a token is?
Um, so, in simple
Simple
terms,
yet simple yet difficult.
that's the most difficult part, right? But for me, when we are talking with founders who are Web2 native mostly, right? So explaining the concept of token is something that is very interesting when we discuss it with them, right? Because for them, they are always, more aware about terms such as equity, dilution, and how much are they getting money for money, but they are not aware about the token. So, in normal terms, what we like to define the token is it's going to be the core economic, media or an asset that is going to help the different stakeholders. By different stakeholders, I mean your community, your team, your developers, whoever is participating in the protocol itself and outside the protocol. The token would be a medium through which they will be exchanging that value. This value exchange, could be denoted in USD, it could be denoted in the tokens, nomenclature itself. But at the end of the day, the main purpose of the token is to define the transfer of, or the passing of the value. A lot of protocols have different type of tokens, right? Governance token, utility token. But the end of the day, what is transferred whenever a token is being transferred is the value that they hold. A utility token is used for paying gas fees, right? Purchasing something, or maybe getting you a membership, right? Just random examples. A governance token, in the other case, would give you rights to vote or participate in the board meeting kind of a setup, right? Where you are deciding the future of the protocol itself. You are participating there and you are using those tokens to cast your vote. So, in both the cases, there is an exchange of value. The exchange of value is different, but at the same time, there is an exchange of value, and the token is the medium for that. So I think that should be
Great.
sufficient. Yeah.
Yeah, yeah. So basically, if anybody is a new investor,
Mhm.
tokens are basically for you using a particular utility that perhaps the game, the community, or the product has to offer. Uh, it's a great way to generate liquidity. Like, for example, in the share market or in the stock market, you have companies like Apple, you have companies like Samsung that are listed, and uh, you and I, as retail traders, can get an access to them with whatever price they are trading, hold it for a few years, and hopefully, maybe double your money or triple your money. Now, with token, what happens is that there's a big risk because the underlying fundamental value for most of the tokens is less to none. So it depends on you. It depends on what you see. It depends on the community that you're associated with and who are backing the project, the team behind it, and that is your opportunity to support a project early. Uh, Basically, it is a similar kind of setup with incubators like TDeFi or the earlier VCs who we have had, right? They get to their access is early and their risk is also very high. But by the time it comes to you, the risk is reduced marginally, but even the price is gone high. So this is a trade-off that they do, and it depends on you which side you want to be and how much capital you have to deploy. Let's, because talk about what do you think of fair launch? Do you think fair launch is still valid in 2026?
So I would like to answer this question, and I would like to add something that you're talking just right now, right,
Please,
about
please.
token being a risk, right, and how investors coming in, kind of minimize that risk. So there are multiple tokenomics designers, right? And each of them have their set of values, their set of frameworks. But what TDeFi, actually believes in or inculcates is we always link the token value or the accrual of the token to the business model or business activity itself, right? So in that way, if you see, if you are a token holder, or if you're a stockholder, the sheer difference is stocks can be issued, your stocks can be diluted, but the token would never get diluted, right? And same is with the fundamental of the company structure as well, right? As a founder, when you are raising funds, you are diluting your equity, your ownership of the company to the investors, to the other participants. But when you are a token, a token based founder, so you are raising enough liquidity, right? You are onboarding community, but at the same time, you are retaining the ownership of your company as well. So your business is still your business, right? And that is one of the beautified ways of the tokenomics, that it's up to you. Do you want to build a decentralized platform, or do you want to have a centralized platform? And how do you want to ensure that who will be owning the responsibility or the future of the platform? So there are risks. Obviously, I agree with you. But at the end of the day, the beauty about token is you have risk, but at the same time, you have higher upside, you have higher uh, credibility, and I'll say governance power as well. You can participate in the governance structures, and you can literally pivot the protocol from something that is not working to something that works really well. Now, coming to the
If you're sorry, go ahead. Go ahead. Go ahead. Go ahead.
no, no, please continue.
Any,
I'll just
please.
complete the question that you
Okay,
asked.
I wanted to say that if tokens are so amazing, then
Mhm.
why do we have Coinbase and Kraken doing an IPO and not doing a token launch?
I mean, for Coinbase or even Kraken, right? So Kraken itself has operated as an exchange, right? And Coinbase has its layer two and the payment rails, right? The USD infrastructure, which is generating most of the revenues for them. So for them, the token does not hold a lot of value. They have already introduced a stable coin rail, right? So for them, it does not make sense to kind of create a token and distribute it to the community uh, or their stakeholders, because they are not going to kind of transfer that value to the token that they will be creating, right? They are a simple business. Like if I ask a bank to create their own vehicle, that won't make sense. The banks are there to
What do you think of Binance then?
Binance was one of the fantastic cases, right? It started with something and then it has scaled to a lot of things. So it was one of the early innovations as well, right? Because Binance had not only Binance, a lot of exchanges, I'll say, are still sticking to the Binance model where they have the token and they use the token to incentivize the traders. These are buyers, the sellers, right? They have curated these tiers on which the more you trade, right, the more profits that you generate, you are getting discounts, you are getting cashbacks. The more users you bring in, you are getting those referrals, right? So end of the day, that was their GTM, that was their initial strategy on how they want to onboard more and more users. Even now, when we are talking about being the payment lead, right, the stablecoin era, so Binance Pay is still very fastly growing, right, and it has onboarded multiple business vendors, and the strategy they are using for it is similar to what they did with the Binance Exchange. So for them, it's mostly focusing on onboarding more and more users, giving them the discounts, the cashbacks, and the leverages. So they have the biggest liquidity and the biggest network of the relevant users and the peoples in their ecosystem. These are the buyers, the sellers, the shopkeepers who are accepting Binance Pay, right? And if anyone is accepting, like you have Google Pay, you have Apple Pay, right? So more and more brands and shops are open to accepting Google Pay or Apple Pay. So if you are tied up with them, more and more users from Binance platform will be open to using Binance Pay for paying for their day-to-day transactions.
Got it. Got it. When a new project comes to you and they say,
Mhm.
because please incubate us, please make us a unicorn, make us billionaires and millionaires. Uh,
Yeah.
what's the first set of questions that you ask them to understand what they're building?
I mean, we have been on multiple calls. So till date, I think I have been myself on more than 1,000 calls with the startups and the founders. And the thing that I have noticed about most startups is uh, the way you can identify a founder who is going to make a unicorn or is going to become a million or a $1 billion business is the one who is not expecting anything, right? He's not becoming, or he's not envisioning to become a millionaire or a billionaire. The first emphasis that they have is they know their product works and they are trying to solve a problem. So the kind of founders that we mostly look for falls into the same category. We look for founders who actually love their product and they are solving a real problem, right? So it could be a copy of very successful business. It could be something from ground, from scratch. But at the end of the day, if you as a founder are in it for the love of it, right, and for solving a problem, then we are surely, we are the ones who will be surely backing you. But if you are a founder who is just here for the short term gains, right? At the end of the day, we don't hate anyone. We don't judge anyone. Everyone here is to make money, right? They want to become the millionaires, the billionaires, have their Lambos and yachts. Uh, but yeah, we are also very wary of those founders who just want to, get big in 3 months and want to have all those lavish lifestyle and the blinks. So that is
You know,
something we tend to avoid.
true, true. I want to bring something to the notice of all our guests. I've read of a very interesting article. Unfortunately, not a lot of us in crypto know this, but we should know this. So, the FBI, right, in the US, created a token, okay? Created a token, went out to uh, the guys in the market. The token was called Next Fund AI with a very professional looking website, white paper, everything. And the objective was to specifically act as a sting to catch crypto market manipulators. Now imagine this, the government doing this on their own. They listed this on Uniswap and Ethereum and approached professional market maker firms, asked them to fake trade volume. The firms agreed on calls and admitted to do wash trade, pump and dump tactics, uh, and even used manufacture organic volume for as little as $200 to fake 1 million daily volume. Can you imagine that? $200 to fake 1 million daily volume. 18 individuals were a part of this across US, UK, and Portugal. In fact, there is a market maker that most of us know is Godbit. Yeah, Godbit. And
Okay.
he
So
was
are we
one of
allowed
them.
to take name
Yeah,
publicly?
yeah, yeah, yeah. So as long as it is legal and it is verified and it's part and like it's in the news, right? I'm not saying
Mhm.
that because I think you have done this, right? I'm not saying that. I'm saying I'm in fact I'm reading this right now from the market, right? Because it's been linked to big names like projects like Saitama, which had 7.5 billion market cap. And I think we need to talk about this in the open because the
Mhm.
people who are watching us need to understand that what the government is doing, what the other people in the space are doing, and how things are moving ahead. In fact, let me tell you this: that the FBI ran a second round of this in 2026 with another undercover token called LexoBit, leading up to 10 plus more arrests. So these are just crazy times that we are in, that the government is now launching its token and bringing in partners to figure out who is manipulating. For me, it's a great move uh, to kind of figure out who's doing what, because at the end of the day, the guys sitting in Pakistan, India, or a so-called third world country, for who even $50 would matter, right? Uh, Now you and I are both Indians, uh, but $50 in India still holds uh,
Yeah.
some value, right? With an average salary of maybe 200 to 300 US dollars, if somebody is trying to take that risk, uh, I think they need to be covered. And I hope that even the Indian government uh, uses this format so that we can not just look at 30% crypto tax, but please remove the 1% TDS. It absolutely makes no sense. Uh, but what is your take on this? Do you think government should do this more often? What is your take?
So I mean, what US did, right? It was much needed in the market, specifically because a lot of unclarity about the regulations and the compliance, right? And I'm not the one who likes to take a lot of names, but a lot of the competitors, we also have a market management arm, like the token management arm. But they used to have this pitch, right? Come to us, put in $1,000 in liquidity, and we'll take the volume to 1 million, 2 million, 10 million. You name it, we get you there, right? And a lot of projects were actually going for that. And at the end of the day, what this is doing is this is playing with the retail audience money, right? A person like you're talking from India, or maybe Asian continent, right? $50 is a large amount for them, and they might see a token being pumped, right? They might enter it and they might get wiped out. Simple as that. So a lot of market manipulation was happening, uh, and this was a big crackdown that was meant to happen, that was needed in the market. After that, a lot of market makers have been behaving very proactively and within the compliance, so that's a good thing. We never suggest our projects to do that, right? That's why we have a token management arm as well, the MM arm, where we focus on building the organic liquidity, bringing the organic traders, right? We publish reports about the projects. We talk about the moat, right? And we also kind of teach the traders about how they can identify good projects from maybe a rug pull or a time pass project. So that is something that needs to be done in
Tell me a
Indian.
few things that every retail investor should look at before investing in that token, be it be it listing on Binance or any other. Uh, I think if a project is listed on Binance, then we can trust that Binance has done their DND, which is
Uh,
due diligence.
yeah.
You're laughing and you're
So
saying no, no,
I
really?
mean,
Tell
Binance
us
does
more.
their due diligence, but they also, like, the projects have these market makers. At the end of the day, if you see a lot of projects which were listed on Binance, even they have lost their value by 99%, 95%. They are down from their all-time high, right? And if you see their post-launch performance, a lot of them were doing actually very good in terms of the token price, the volume, and everything. But 2 3 months after the listing, and all of them lost their value, and half of them also got delisted from Binance, right? So Binance does a good work in identifying and vetting a project, but at the end of the day, what is being manipulated by a market maker, is it cannot be handled by Binance alone. So the projects also have to kind of take the responsibility for not playing with the retail audience or the retail investors. And the markers that I would like to personally see, or like the thesis that we have whenever we are looking at the token, right? The few things that we like to always take a look at is what is the native liquidity of that token in each of the exchanges where it is being traded, right? So if we see the depth or the liquidity depth being 20K, 5K, 10K, right? And the market cap is in billions, right? So that's a big red flag. If it cannot support the buying, right, or the selling pressure of even 20K, what's the use of having 2 billion FTV? Simple, right? So that's being pumped. The second thing is, if the token, you can go to Etherscan or maybe other these portals, right? And you can always have a look at the total token holders. and then you can have a look at how many what percentage of those total token holders are holding how much token supply. So in most of the projects that are being managed by market makers or external parties, you'll see the top 10-15 wallets holding most of the token supply. Again, that's a big red flag, because the most of the trade that is happening, or the volume of tokens which are being traded, right, are being managed from these accounts. And then there are maybe 1,000 or 10,000 wallets who are holding just 0.0001% of the supply. So these kind of users are always going to get washed out, because at the end of the day,
Absolutely.
the people, the top 10 accounts who are holding 80% or 90% of the supply, they have the power. So a
You
few
know,
things that
for everybody watching us, listen to Vikas very carefully, because what he's saying is actually pro level stuff. You need to take notes. Just watch this video again from this time, because this can save you a lot of money, problem, and effort. Because remember, it's not about taking a great trade, it's about getting into a project with DYOR, not Christian Dior, but do your own research. Sorry, go ahead, Vikas.
Yeah. So these are the two important on-chain parameters that I look for. The third thing that we mostly look for is the community, right? So always go dive into the Discord channel, the Telegram group, and the Twitter, right? Because if a project is legit, right? I'm not saying most of the projects have bots following them, millions of bot followers, and their posts only have 10 likes or maybe 10 comments, and most of those comments are again structured in a manner that you can see that's a bot activity. So if you are seeing those kind of, you see any token, you go to their social media page, right, and you can see the community is not at all active. They have thousands of users, but no one is talking about the token, no one is asking about the utility, about the project, the team itself, right? So that's again a red flag, because most of these people are either bots, right, or they are just there for the short shilling, right? So even the KOLs that you identify who are promoting those projects always do a background research on the projects that they have worked with before, and what's the status of that token. Was it pumped and dumped, or is it still doing good, right? So these kind of things will actually help you in taking a better trade and investing, or taking position in a token which is going to sustain its value and go up from there. So these are the few checklists that I personally like to have, like the background about the team, the on-chain metrics, and their social media. The social media is again is always going to be a big identifier, because other metrics can be kind of manipulated, but what you cannot manipulate is the social media or the community interaction. So even if a project has 1,000 followers community, but the community is always very active, talking about the white paper, the team, the roadmap, you can you can take a bet on that project, because the community is actually interested in what the project is building. So they are going to stay there, they are going to hold the token, they are going to take the token. It might be slow journey, but it is going to take success.
I agree. Vikas, tell me, in this day and age of AI and
Yeah.
the way tokens are pumping and stuff, what is the right way to build a community in 2026 in the era of agentic AI and the way the crypto is right now?
I mean, the benefit of agentic AI, which we also have been utilizing a lot, it kind of helps you in customizing and targeting each segment of the user that you want to onboard, right? So earlier, the GTM used to be always following a niche of the community that you want to onboard, and these were mostly the speculators, right, who actually want to come in early and then dump the token once the token is launched, right? But nowadays, just due to the analytics and the agents, right, you can actually target the users who are actually interested in something that you are building, right? And these agents will be doing the outreach on your behalf to these kind of users. You can target your ads, you can target your campaigns to these kind of users. And I'm not saying you will build a 1 million community in 10 days or a week, right? but the community that you will be building through these agents, because you can set their behavior, right? So if I'm looking for someone who's interested in sports prediction or prediction market in general, I can use or I can launch these agents, right, on Twitter, who will be scrolling through different accounts and will be looking at the keywords through NLP, right? And anyone who is talking or posting more about, let's say, soccer, maybe cricket, maybe rugby, right? These are the kind of users I'll like to reach out, right? And I'll be sending them that here's the platform, right? You can track all the activities here. You can also participate in this. You can make your predictions. You can win something out of it, right? So that would be one of the hooks where I will be kind of targeting these kind of particular niche users and onboarding them to my platform. Now the journey from there would be different for each of the users. A lot of them might just come in for just looking at the platform. A lot of them would actually register and become a lifetime member. But uh, agentic
What
AI
tools
has
do
been
you?
very
Sorry, go
what
ahead.
tool. Yeah. So mostly we have been using Hotjar, and lately in terms of LLM, I think Claude has been very helpful. There is also Replit, which kind of helps you in optimizing the UI UX, right, of the
No,
application,
no, no.
and
I
also
mean, I'm sorry. I mean, tools to build a great community.
oh
Because, yeah.
yeah. So, so far we are not using any tools, but at the end of the day, again, the way that we have been working is we have uh, created our own custom agents, right? Which kind of manage the subject matter expertise, right? So these are the agents which kind of track all the information there is regarding to Web3, RWA, or any other thing, right? And they would choose out the five best performing topics, right? And they will give us the material on which we should post our opinion on. Now, again, this is one of the great ways in which you can connect with the audience that you are targeting, because you know what is performing well, why it is performing well. It's all broken down to you through your agent, right? And now what you have to do is take the pointers from there and write something from your own. So even as a founder, I can't tell you that there is a particular tool that you should be using, but what you should be using is, if you can take a few, maybe a couple of hours every week, and maybe build a custom bot, right? A custom app that is going to learn more about your speaking style, about the way you talk, your knowledge, right? And then you can give it a set list of tasks to do research, to create custom messages. So this is going to help you a lot in targeting and building the kind of community that you want to build. There is also a few, I'll say, AI avatar based social media posting agents like Hagen, I think is one of them, right? So you can upload your voice, you can upload your video, right? You can train it, then you can give it the script, and it will be doing the video creation part and the posting part on behalf of you. So now you are automating that part, right? So your social media is always engaged, and you're creating the content which is going to provide value to your users. It's not a random reel that you are creating. So end of the day, you should be using these kind of tools who can help you in focusing and managing your time.
Go ahead, go
Hi.
ahead.
Yeah. So these are the kind of tools that we would like to recommend, right? 11 Labs, Hagen, a great way to kind of keep posting the stuff that you want to talk about, engage with the users, and save your time on building the product.
Great. Thank you. Thank you so much, Vikas. Now we have Gaurav joining us with a new hairstyle, with a new look that is sporting. Gaurav, how have you been and how's it going?
I am doing amazing. Thank you for having me. Good to see you, Vikas. I know you're surprised because Vikas talks to me like thrice a day and he had no idea this has happened. So I keep this hairstyle once in 3 to 4 years. It's healthy for the scalp. Right now, I'm investing in a lot in longevity and peptides. So also going through peptide therapy using the opportunity of summers and um, yeah, so that's about the hairstyle. Work wise, obviously, the markets are roaring about stable coins, payments, cross border payments, and everything that the TradFi banking and payments and processing acquisition, I mean, acquiring is the technical word, was doing on the Visa, Master, and Swift rails is now slowly shifting on the crypto alternatives, and that's incredible to observe. So while the token market's a little slow, the institutional payments and banking markets are super hot in crypto.
Got it. Gaurav, thank you for joining in and accepting my invitation, and thank you for sending over Vikas. You know, with everything that you have done with 70 plus projects with 400 million in AUM, uh, do you think that in today's world, what does it take for a project to survive the second, uh, the second cycle? Because any token that you take, they go through a cycle where they lose community members, they lose team members, and they lose majority of the value of the token. And very few people and very few projects can actually come over it. What do you think it takes for that?
This is not a new concept. It's just a mirage that sort of circumvents people's head in crypto. They think that a meme trend, they think that a NFT JPEG trend, they think any superficial, non-value creating entertainment trend would sustain a life cycle as of a typical value startup that lives through summers and winters of the capital markets, of the political markets, of the compliance markets, but is able to live through all of this and many other waves and many other hardships just because it is not dependent on the value of entertainment of the community. And the community in that context, in a traditional startup context, does not mean entertainment community. It actually means people who participate in the value of that product, people who are genuinely interested in using that product for their own good, for the value it creates for them. And that community, the true community, the user community, does not leave the product across any speculative hardship or even sometimes non-speculative, let's say, compliance hardships. And and that's how you build a large company. So to answer your question straight now, on the drop of that context, anyone that is not building an entertainment company in crypto and has a value proposition for the users are able to survive through any summer or winter or good or bad phase.
So let's talk about the Om token, right? With Mantra, they went through a massive issue. But do you think for them to reach their previous glory, what will it take for someone like Om token to get back to this pinnacle?
So let's decipher very quickly their previous glory. Was it the value they created? 40 million assets on chain in an RWA project doesn't actually mean nothing. There are projects with 400, $500 million of real assets on their protocol, on their infrastructure, are creating much less value. So if you would give me one reason that defines or is able to justify even 1% of their total valuation, I would bow down to you and your business analytics skills. Because we have worked with Mantra, we've been a close contact for the leadership for a few affairs, and so if we were to find like one reason for the glory, as you mentioned, or the valuations as we saw or that you're referring to, it was just a speculative value of a publicly trading asset. And there are many aspects at play in publicly trading markets. The success of the market valuation or speculative valuation of Mantra was a byproduct of a well orchestrated, well played marketing slash placement slash speculation, right? And of course the right time of the market liquidity cycles. So I don't have an answer for you to
No, I
predict
think I
same
think you
success.
answered it very well. I think you answered it very well in terms of that we retail users who are on, who are watching us on different platforms. How do we understand when is a token overhyped? What is the real fundamentals to it? Can you break that down? Because I think the way you have explained this makes a lot of sense. Clearly, you mentioned that Mantra was overhyped in the previous cycle, and now they'll have to build ground up, and 40 million in tokenized assets is clearly nothing. Because I was with the Brickin guys that I was talking, and then I was talking to the Stellar guys. We had them on Aura8, and then Stellar here talks about $2 billion in tokenized bonds, and and Brickin talks about 500 million in AUM. So 40 million compared to that sounds nothing, but very well mentioned that the marketing hype. That is why I'm even bringing it out, right? Because it kind of stuck with me in terms of the way Mantra was positioned. So, for retail users who are listening to us, how do we understand when a project is overhyped and the fundamentals?
So there's no limit to how much research you can do, but let me at least define the first couple of steps, right? The least you can do, and the value doesn't matter. You might be investing $10 or you might be investing $10 million. I'm sure the respective value of $10 of the guy investing $10 is as big or small as it would be for the guy investing $10 million in a speculative asset, right? So if you look at value or money from the perspective of the investor, it's always big, right? It's always an emotional bet. Now, keeping that context, if you are investing your valuable investment, emotional and commercial investment, you ought to do some research. And so the first line or minute of research should always go into watching this legendary video on YouTube and many other platforms from Ray Dalio. And the title of that video is How the Economic Machinery Works. There is no better, like literally no better explanation of how an economic machinery works. Why am I talking about that? Crypto, for the first time, defined a full economy into one instrument, and that is the token of that ecosystem, of that smart contract, of that infrastructure. Doesn't really matter what that is. The complete value system of of a organization or a decentralized organization is defined. The complete economic structure is defined within the token, its white paper, and its utility, as we call it. That's why the word tokenomics came into play. Yes, it is a overly exploited word by many so-called advisors and experts in the space. They simply divide the 100% supply of a token in fancy pie charts in different forms and factors, and they call it a tokenomics. While tokenomics should be the real ground economics of the project. And what is the economics of a project? Absolute value of value coming in and absolute value of value going out. And obviously, this if the absolute value of value going out is larger than the resources coming in or value coming in, then it's a positive economy. It's a net positive economy. It doesn't really takes rocket science to understand that, right? And that is called production value in this video by Ray Dalio. And Ray Dalio simply explains that for any economy to rise, the production value can never be exaggeratingly high, right? It will always be rationally and linearly progressing. So the real value of any economic system will always grow slowly, but because there is an element of marketing and speculation in public markets, the speculative value of this economic system will always go through crest and troughs in waves, right? So you, if you can plot, I'm sorry, I don't have a whiteboard here on the screen, but if I'm able to plot it in front of you, here is the graph of growth of a productivity cycle. There will always be waves of speculative value on the top, right? And so Ray Dalio explains that it's very tough to bet on the speculative waves, like practically nobody knows, because these speculative waves can go higher than this line of productivity or can go lower than this line of productivity. But it's always safe to bet on this linear productivity growth. And obviously, it takes time and it takes understanding. To sum up my long reference so far, if you are able to find this net value production of any system, you are okay to invest in it. I'm not saying it's a safe investment and that it will only be, resulting in positive, because there are many other factors. But you would do so much better than betting on a speculative cycle. So, how should you invest? First, understand what an economy is, because tokens are closed economy and it's very easy to win or lose if you're able to see the production value of that economy. And second, read the white paper, understand the tokenomics, and see how the token is non-negotiably, non-arguably the absolute value representation of this system, right? What do I mean by that? Oh, my system or my business makes revenue from advertising, and this revenue is used for buyback and burn. Well, who is deciding the buyback? Me, the owner of the system. And there's a problem. I might need a new house tomorrow, and I would need extra cash. And at that point of time, I can decide I don't want to buy back and burn. I want to buy back and buy a new Lamborghini, right? And guess what? Token holders and investors are left with nothing, just fake promises. And a project that I absolutely love and respect, but really don't like this thing that they've done recently, is Jupiter. Their tokenomics was entirely based on the discretion, seemingly, of the leadership to decide if the token would be bought back and burn. And so while they are producing massive, massive, massive revenue in hundreds of millions of dollars, the token holders, the primary investors, are left high and dry because the company decided not to buy back and burn all of a sudden, right? And just save that money for whatever. Like, there is no justification for that. I really, really hate to start on that topic because it's ridiculous. But
You
these
know,
guys are my close friends. But I mean, so those should be your foundation of investing.
Sion is coming on a show with Robinson. Sion is the founder of Jupiter, and Robinson is the co-founder of Wormhole. They are coming up on June 2nd.
Both are my good
And
friends. Robinson, at least.
yes.
Uh,
So, we will ask this question, but
Sion,
do you
I've
think it
met
is
a bunch of times, but Cash is a better acquaintance to me. Cash is the co-founder.
okay?
Also
So,
lives in
don't you
Dubai, by
think
the way, Baba. We should call him physically to your studio.
who?
Cash.
Okay, okay. I didn't know. Maybe we'll do an episode of the roadcast with him where I drive people in my car and I have a conversation with
Yeah,
them. Gaurav,
yeah.
tell me that, don't you think a founder should decide what to do with the, with the mechanism, and they are allowed to change, or do you prefer a DAO system, or do you, I'll tell you where I'm coming from. I'm coming from Google. Like, Google don't give out dividends to their stockholders. Google uses that same dividend and they push it into their business, and they say that will give them better returns. Uh, Don't you think a founder should take a call in terms of what he wants to do?
Um, okay, let me frame that into an analogy. Um,
Please be as brutal as you can, Gaurav. We love your
oh,
personality
don't.
with no
Yeah,
filter.
yeah, yeah.
So drop everything
That's
down.
yeah. That's me. Thank you. I don't care about the beautification. Um, so if you said car, right? If you are choosing to drive, like I'm Indian, I love driving cars. I've driven 900,000 kilometers. um, and in India we have a right driving system to the right of the road, sorry, left of the road, but a right wheel in the car, right? So as a driver, like let's get into the basic question. As a driver, should I choose how to drive? Yeah, well, yes, absolutely. That's what driving is about. But I cannot choose to drive on the right in India if the road is supposed to or meant to drive on the left. So there's always the law of the land that governs the basics, and then your discretion starts, right? So in the world of centralized business setups, which is huge, not to mention, as Jensen Yangtze recently said, it's $100 trillion economy, a total which is supposed to expand to 200 and $300 trillion, right? So if you want that discretion and that equity structure and that governance structure, well, go and build in that world. However, the foundation, the very foundation of anything that has anything to do with blockchain started from Bitcoin and evolved over Ethereum, right? Pretty much basics. And these are decentralized ecosystems. This is the world of decentralization. You are not supposed to build a system that's built on an individual discretion. That is the law of the land. So, as much as you would advocate the founder's discretion, the founder's will, the founder's wit, the founder's everything, yada yada yada, Bitcoin just about works phenomenally without a founder. And as much as you would want to say Ethereum is a big, Vitalik is a big influence in Ethereum, yes, true. But if it comes to absolute reality, there might be a day when people just choose not to follow Vitalik anymore. So the law of the land does not allow for you to be a discretionary owner or even a large influencer in a decentralized ecosystem, which is blockchain and everything inside blockchain. So I'm sorry, I don't have a value proposition for a centralized minded startup to build in the
No,
decentralized ecosystem.
I agree with you. Last week we had Mate from the co-founder of Bitcoin.com, and he apologized on air for the fork and the Bitcoin Cash, and he said, this wasn't good for the ecosystem, and this wasn't what he wanted to do, but times were different, and that's what he did. Uh, when we speak to people like these, we kind of understand, what should be the mindset, and I'm glad that Gaurav is here with us and giving us a detailed mindset of this. Gaurav, you spoke about agentic AI and AI and on our
You mean
personal
Vikas,
project.
right? Not Gaurav. You meant
Sorry?
Vikas. Did you
No,
mean Vikas?
no,
I
Gaurav.
did not
You
talk about agentic.
okay? I'm sorry. The on
Uh,
our call, you spoke about agentic AI and
okay.
Claude. Uh, I want to understand from you. I was reading about Mohammed Alaba's interview. I'm a big fan of that gentleman. He's the founder of Imar, the guy who built Burj Khalifa. Uh, I've had opportunity in the past to meet him in person, and boy, his energy is like someone who's 20, 25 years old, right? He's all out and fierce. Today, the video that I saw is that he said that he has not hired anybody in the last 3 years in Imar and Noon, which is the Amazon version of e-commerce here in the UAE, and we all rely on it. Uh, He's saying that he will cut down 30% jobs in the next 3 months thanks to agentic AI. Uh, what is your what is your prediction of the job losses, of the mass job losses that we're going to see, not just in the UAE but around the world, in including India?
Um, well, quite honestly, I am indeed a bit concerned about India in particular because we were always in the software export economy, like we were the software export economy almost for the last 2 decades.
Shout out to
And
Bangalore.
yeah, and so I am indeed concerned about that. Um, like, what are we supposed to export now? Our largest export is close to dead because Claude ships more code than a complete 5,000 people company in a day, right? As the 5,000 people company do in a year. So it is indeed concerning. I don't really have an answer to that unless, in affairs like these, the government actually has a role to play from education, from skill development, and so on and so forth. And obviously, this is not a political debate, but I'm sure if somebody would ask, there would be some representative of the government that says there is a AI course somewhere down the line, right? But we have just recently observed in the AI conference of India how mild we are in terms of pace of AI education in the country, and hence producing AI talent. But I'm sure, uh, just by the history of how India's always been on the top of innovation in terms of software and skilled services, I'm sure we'll be able to cope up pretty fast. Now, that is exactly the caveat to global talent and global job loss, and as predicted, with an industrial AI industrial revolution. I'm going to say the same thing that everybody says. I mean, I don't have a extraordinary answer for this. It's very basic. When horse chariots were being replaced by steam engines, and mechanical handles were replaced by steam engines, and everything was being replaced by steam engines, and the biggest job on the planet was human labor, everybody thought humans would be dead and there would be no work. And lo and behold, today we have gone through two more industrial revolutions, depends on how you define it, including the digital internet era of the 90s and 20s. And we have always been able to employ more people, better skill, produce more, and the global productivity and hence the GDP of the world has been rising. So no, I don't think we will have any less jobs. I think the efficiency of the work we do as humans in general will increase. If you look at the infrastructure of the world, we have grown from, taking 70 days or 100 days for somebody from a continent like Asia, like a country like India, to even go to UAE through the water channels, or let alone, the great saints like Nanak Dev Ji and others took many years to get to Rome from India, and then to Russia, and then to come back, right? But how much does it take? Like last 15 days, I did 2 days Dubai, 1 day Abu Dhabi, 8 hours New York, 4 days Miami, 2 days San Francisco, 1 day Vegas, back to New York, Abu Dhabi, Dubai, India, everything in 14 days. So this is industrial revolution for you, right? This is how the world changes. The efficiency, the quality, the speed of what we do will change, not the person doing it, right? So I am absolutely not concerned about the net number of people required to do work which creates value and changes humanity for better. That will not change. It will still be those people with grit, with the hunger for innovation, with the hunger to learn, that will keep moving forward, keep acquiring new skills, keep weaponizing this industrial revolution, this modernization of work in their favor, and keep producing better value. And obviously, those who are against the wave, who don't want to change with the change, who don't want to put their hard work to change their personality in themselves, will eventually suffer and will be drained out of the rain, drained out of the stream. And guess what? That has nothing to do with AI. I'm getting to 40 years of age, and I've made my own 26 plus companies. And obviously, in TDeFi, Vikas personally, I think, deals with more than 8 to 10 projects in their complete life cycle every month. Let alone the fact that he has gone through, $0 to $1 billion life cycles of projects, institutional to crypto. And so with me, we have seen so many incredible people being washed off in the stream of evolution. And that evolution could be, blockchain folks on of Bitcoin in 2016, 17, Ethereum tokens of 17, 18, 19s, and new blockchains of 19, 20, 21, DeFi forks and new DeFi ideas of 2021, and memes and yada yada yada. So many people wash off, and I'm super proud still to see people like yourself, Vaibhav, um, and of course TD Group standing through the test of time from 2015 till now. So it has very little to do with something as large as an industrial revolution. People just keep slipping off the stream all the time, and they choose not to go with the trend. They choose not to adopt the new qualities of technology, and the new pace of the society. So yeah, I think it's just the fear of the unknown that people have in their heart. There's not much to worry about.
So this conversation is getting juicier by the minute, and all thanks to Gaurav for this. Gaurav, what you said, if I have to summarize it, it's all about the mindset. Now, I, on this call, know your personal journey, uh, but I will leave it to you if you want to disclose it. It's supremely, supremely inspirational. But tell us that how did you evolve your mindset? Because one thing that I know is that what you already know is no longer good for you to go where you want to go, right? From 0 to 1, you need a different mindset. From 1 to 2, you need a different mindset, and so on and so forth. So tell me the mindset evolution that you have had personally that I would like to learn from.
I think the first teacher is always hardship. So I thank God, universe, situations to have created an environment of hardship. And then I want to thank the like my parents and everybody around me to have supported to fight and to evolve and to live through these tough situations that come to the best of us every once in a while. My best example to demonstrate that is the time of COVID, and when Elon talks about it, and like you're talking about the richest person on the planet, and not just like fairly rich, like his net worth supersedes the second richest and the third richest and the fourth richest combined, right? And this guy talks about just 5 years ago or 6 years ago on a day, and he literally cries of his tears on public television, right? That he had his last 30 million. Well, the number is bigger for the guy who is bigger, right? But think of it, he's still talking about his last bucks, right? And he says he had to choose between his two childs, Tesla or SpaceX. And then he made his choices, and he was able to sail through against, not just public but also expert opinion, that he would be able to survive. So
Just to add on, I'm so sorry. Just to add on to that, he waited to meet Tim Cook for over days, and he's waited in his office for hours together just to meet Tim Cook. And
yeah.
this is also a reminder of that the consultants and the gurus tell you. Everybody told him that please kill one and go with the other, and he chose not to. Sorry, go ahead.
Yeah, exactly. Yes, yes. So I'm saying the answer to your question lies somewhere between the cosmos, throwing tough situations close to impossible as it would seem when you live through them, um, and then your own your team, the people that are surrounding you, and how they choose to support, not just you but the combined initiative, the combined vision together, and then finally
Gaurav,
it all boils down.
Gaurav, I'm sorry. What you're saying is becoming a little generic, right? I don't
And
expect that
you're
from you. I
this
don't
is
expect
a
that
this
from
is
you.
no this is not about giving something special. Sometimes the simple and most evident traits or answers are just about non-existential in 99% human beings. So if I was to ask you how many people go through hardships, uh, everybody. How many people pass through it? Just those who you see after every hard time. So the best test of success is the test of time, right? And I'm sorry I don't have an exciting answer for you, because there's a statement that I learned from. I tremendously got inspired from a statement of Jack Ma in 2020, and that statement was made at the peak of Alibaba, like the highest market cap that Alibaba ever touched, Ali Group ever touched. He said, sometimes winning is being able to live through the tough time because everyone else would just die. This is Jack Ma saying it, not me. Obviously, this is not the literal verbatim. I'm saying what it means, what it implies is your persistence will put you through that, right? Through that tough time,
See, this
while
sounds
everybody
good
else will
for,
fail.
I'm sorry, but this sounds good for people who have made their fuck you money, right? People who don't have to worry about their day to day expenses or rents and so on and so forth, right? Shah Rukh Khan, who I'm a big fan of, I've got a chance to work with him in the past as an MC, and he says ki uh, गुर्बत में creativity नहीं होती, which means that if you're poor and broke, you can't do philosophy in a certain way, right? So what Ali Baba said at this peak, we we all love it. But what about in today's day and age when most of the people who are not evolving are going to be broke, and the mindset that is needed to be prepared? And the what you said is absolutely true, and I personally believe that every man needs to go through a winter at least 2 or 3 times in his life. When I say winter, I mean a patch where he's not making money, and there is no money or liquidity at all in his life, because uh, I am a personal believer and experienced that an empty wallet, uh, uh, empty stomach, and a broken heart are the best teachers in the world. Nobody else can teach you better than these three. So coming back to Gaurav, what is the mindset that is needed to be prepared in this scenario? I'm coming back to this because I
It's
know that there
not
is something
yeah
that
it's
I have.
not so I think we are mixing two things. Nobody is asking somebody dealing with a tough time to offer philosophy. So that's what he meant when he said the statement you're quoting, right? This has nothing to do how to deal with tough times and how to grow through that. This is just about nobody wants to learn from somebody who is in a bad time, and people want to learn from people who have made, in your words, the fuck you money, right? So my conversation or my explanation of your question did not come from the philosophy and preaching point of view. It came from the execution and living through it point of view, right? So it is still the same, it will never change. And yeah, that so the answer remains the same.
Fair. I'm going to ask you a couple of questions and we will end this live stream. Thank you for coming over. Let's talk about Fair Launch in 2026, since you have incubated over 70 odd projects with over 500, yeah, with about 400 AU, AUM. What's your take on fair launch? Do you think it's still viable in 2026, or should we go through the traditional method of an
That's a
incubator,
question
VC,
for
market
Vikas.
makers, and all of
Yeah,
that?
that's a
No,
question for
because
Vikas. He's the expert of the topic. He
because
he
did
he
answer
answers
that
that for
question.
me also. He answered it already. Vikas, can you tell me the answer, please, quickly? Give me a hint.
Like guy.
Uh, I mean, I'll be very short about it, right? So, fair launch at the end of the day, right? Uh, one of the biggest supporters for fair launch because you are getting the day one, the day zero supporters, a fair opportunity to participate in the success, to speculate on you, which a lot of these VC-led rounds, kind of treat the retail investors as their exit liquidity. So even in these days in 2026, I think fair launch, if you have again sorted your economics, you have the right set of community, fair launch is the way to go. But if you want to build something being burdened out by the VC money and someone chasing behind you to make you work, then obviously go for the VC money.
Great, thank you. Gaurav, with stables coming into the mainstream right now, we have YC Combinator giving out their grants in stables. We have Facebook now giving out grants to their dev community in stables. Uh, on 27th of May, we are going to have Reeve Collins, the co-founder of USDT and the chairman of STMPL, and Yatsu, the chairman of Ania Mocha Brands. In fact,
My
shout
best
out to you,
friend.
Gaurav. At your event, was the first time when I saw Yatsu speak at during GITEX at World Trade Center of
That was
Future Proxy Summit.
his first appearance in Asia.
Okay,
I mean
thank you.
Asia as in UAE. Sorry, obviously he's
Yes,
from Asia, but
yeah, thank you. Thank you for bringing him over. There, so I'm bringing these two guys because Yatsu is launching Hong Kong stables or already launched Hong Kong stables. Reeve is working on the technology with STMPL. What do you think? Is the major play of uh, stables going to be in the coming few years? Do you think our economy, our background, and everything is ready for stables?
everybody is ready for a new technology that makes their life simpler and creates value in terms of replacing or optimizing an existing infrastructure, both for cost, speed, and resources. So stable is that by far in the context of the existing um, state of money, state of transfers, and state of instrumentation. And so there's no question, especially now after stable coin companies being valued at hundreds of billions of dollars. Uh, I If the question is specific for India, obviously India is no different in terms of financial landscape. So the value prop is exactly the same as it is for the rest of the world. Would the government and the compliance landscape accept it and move faster? Well, I don't entirely blame India for not taking stables very seriously because I mean we have a far better infrastructure in terms of UPI,
UPI, yeah.
uh,
Yeah.
and we've had that for more than a decade, and it's implemented at numbers that are far beyond the collective global number of stablecoin endpoints. So it's okay. I mean, the world is trying to catch up with something India's built and excelled in. Um, but let's see, there should be a point where maybe in 10 years where we come back on our export import and large transactional um, regime or large transaction requirement with the rest of the world, and that is probably a point when India might want to reconsider its stance on stables. As of global, I think my first answer about how stables replace instrumentation, resource cost, and speed, it's not even a question on how fast and how big should it adopt and replace the entire currency landscape.
I totally agree with you. The speed of transfer is insane, and I think that is the biggest reason why stables is going to be in the forefront with all the currencies in the world. uh, India did try CDBC. When I saw it on somebody's phone, I was like, "Are we going back to the old days where if I have to give you 11 rupees, I cannot give you 15 rupees, because it comes in the denomination of one, fives, tens." So that was very interesting for me to see. Uh, Aritra from Ankh will be coming in, who have claimed to launch the stable coins for India. Uh, do you think stablecoins will grow with Polygon and Ankh, or India is out of the question?
I think India is out of the question for now.
Love that.
Simply.
Gaurav, thank you so much for your time. Because I give you this opportunity to ask Gaurav anything that you ever wanted to. The spotlight is on you. Anything that you ever wanted to ask your boss, go ahead. Now is the time, and he cannot say no because he's live.
I mean, no such questions because, as Gaurav told you, we speak 3 times a day. So most of the questions, the stupid questions or the hard ones, I do ask him time to time. Uh, but yeah, something that is interesting to me, and I would like to know Gaurav's opinion on that as well. So Nikhil Kamath, just a few days back, said that he wants to explore a mechanism where all the household gold in India can be kind of transferred or or converted into a stable coin infrastructure, and he's looking for that kind of infra. So, uh, what do you think about that? I mean, uh,
I don't see the plot of this infra. For anything to be tokenized, it should be in a regulated custody, right? Tokenization, sadly, is not a decentralized solution. It's a very centralized solution, right?
yeah,
Where the registry, the paper trail of an asset, which has been an integral part of any asset, has been also the limiting form or the limiting form factor of that asset, is now being replaced by a digital token moving across a more viable, more adopted, probably public, but most time private blockchain. So a public infrastructure, as I would want to refer it, right? So you get the plot. It's a centralized structure to mobilize the pre-immobilized paper connection or the compliance paper connection of an asset, right? So,
yeah,
in order to validate the reality of the asset, you actually need a regulated system, a compliant, like I said, it's a compliance chain. The paper is a compliance trail now being replaced by a token for mobility, right? The base layer is still the regulated custody and the verified custody of the product. And if you're trying to tokenize the gold in a person's house, I'm not sure if that's what he would say or he was saying or implying. I find it absolutely impossible. Obviously, never say impossible. Um, but I find it absolutely tough, if not impossible, to for that to happen, unless maybe they tie up with all national banks, and all national banks convert their storage or their strong room setup into a calculated verified gold store setup, and then bring that token on chain. I mean, yeah, I'm happy to consult them. Let's talk to Nikhil. I met him in Switzerland, but we didn't exchange contacts. So that can be one. And if he's talking about the same typical solution that we already have in the world and pretty much like successful, which is there is a central reserve in the country or outside the country that is issuing gold tokens, and then people choose to buy this gold token, which I find very tough for the Indian context. For us, like, gold is not just like a religious or a celebratory side. It is a pride. It's a matter of showcasing, right? So I don't find the viability, but let's have a chat with Nikhil.
Um, a quick trivia: Nikhil and I are homies. We are approximately the same age and from the same city, and partied many times in Bangalore at ICE at Taj by Vivanta on MG Road. Uh, I know a lot of his early investors who actually sold their restaurants. One is Baba the Dhaba, and the other one is Smolly's, and going all in. I never understood back then, but I'm glad they did, because when we saw them driving Audis and like really cool cars, and we were like, how did this happen? In fact, in Bangalore there was a very famous gym called Austin's Gym. Austin then moved to UAE, and unfortunately he lost his legs. But then even he was an early investor in Zerodha. So hats off to everybody who believed in early in Nikhil Kamath, and this is the way the world works. So, guys, thank you so much for your time, for coming over. Uh, be rest assured that everything that you have said is for all of us to learn, and for all of us to grow. We'll have smaller clips of these videos, and we will post it on all our social medias. So, Gaurav and Vikas, thank you so much for your time.
Thank you,
Thank you,
Eva, for
Gaurav.
Is
having
there
us. It was
any
fun.
last things that you would like to say to me, Gaurav? Because we have known each other
I'd
for a
say
while.
good night. Yeah, I'd say good night. I usually sleep 3 hours before this time. So,
Thank you. Thank you.
yeah,
Vikas,
super late. Cheers. Bye
thank you.
bye.
Bye
Have
bye.
a good night, guys.
Thank you for your time.
Thank you.
Yeah.
Thank you, everybody. Tomorrow we are going to have Noli from Malaysia Blockchain Week and Cheska from Philippines Blockchain Week coming over. So do drop by.